In today's video, we unravel a stat that we haven't seen since 1928, but it doesn't just stop there. Your mind will be completely blown as an investor and trader when we take a look at the latest sentiment reports. In today's video, we break it all down together as we see structure improve across the board and some markets already go crazy into inauguration. Yes, it's the weekend of Trumpcoin, Solana, XRP, and many other things. In today's video, we break down stocks, commodities, and cryptos for what you need to be looking out for over the next coming days, weeks, and even months. Guys, this is our special weekend edition. We'll see you in a moment. Well, guys, it's that time of week where we take a look at what just happened in markets, but more importantly, some of the reads are getting absolutely wild. My name's Tom, and in today's video, we'll take a look at what just happened on banks and why it's so good for the markets, and of course, the overall breadth improvement, something we haven't seen since 1928. Are we still getting the end of this bull cycle? Well, first up, let's go to the mind-blowing stat. I saw this report. I had a suspicion it would be lower, but wow, 25.4% of respondents came in and they were bullish. Only 25.4. This is down from 34. That's almost 10 down over the week. And of course, as we know, these are taken as of Tuesday close. So just before the CPI. Now you can probably put two and two together why the market squeezed as much as it did. 40.6% of people were bearish. And this took, of course, the bull-bear spread all the way back down, traditionally to a point where you would usually be looking at potential buys. So as you guys can see here, this is actually what happens when we get a similar spread. 56% of the time, 1 week later, we're bullish. But overall, take a look at the 3-month stat, the 6-month stat, and the 1-year stat. This is what Wall Street do. They absolutely push people to their absolute limits. And of course, it was a very compelling story. Inflation's back, everything's shocking. The economy is going into recession, and suddenly, just like that, they flick a switch and they start to buy it back up. Remember, there are always two cases in the markets. The key is, can you read them through? And as a few of you have said in the comments down below, I know what Tom's going to be saying in today's video is going to be BTFDing. Well, yeah, at the moment, that's kind of way we're looking at it. But remember, for 2025, that may not be the case. We lost the Santa Claus rally. We lost the toy barometer. And of course, well, we've basically lost it now. Yes, it's just been recorded as a loss, no 3% over those 3 months. And of course, we've also even lost the 3-month read that we usually look for December, January, February. So unfortunately, 2025 is going to be a tougher year. But at the moment, how do the stats look? Well, let's have a look down here. 88% over 3 months, 94% over 12 months. So the stats are starting to come right back into the case here for the bulls when you're just looking at these sentiment reports. What it's basically shown you is that the market is an expert trapper and people have certainly been caught off guard. Hopefully not you guys out there as the market has rallied up. Percentage of stocks with MACD buy signals just went absolutely ballistic as breadth improved across the board. And as you can see here, the macro charts, whenever you see these types of reads, you're usually coming out of a pretty significant drop. Now, sometimes it can be short-lived, so we have to be careful about that, especially during, of course, this 2022 signal period. But when you're in a more bullish cycle, it can be a really good sign. We've also seen a huge improvement of course, breadth. Now, I mentioned 1928. Now, no one likes these stats, but I think it's actually an interesting period. 1 year before the mega crash. Interesting there. So overall this week we saw 2.91% on the S&P, average stocks gained 3.92%, and 323 stocks beat the index, taking us to over 68% of breadth, and that's not something we've seen since 1928 over 5 straight days. So it seems to me like kind of like one of these like algo driven relief rallies. And you might say, well, Tom, there was no algos driven in 1928. Of course not. But it was that Wall Street driven, okay, put the buy on, bang, 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 bang. They just keep basically buying through the session while they know sentiment has shifted to the downside, effectively trapping offside people and, of course, getting the better price. The S&P 500 just tied the record streak for that good breadth, as you can see here across the board, all the reads since 1928. And we can also see here that even Staples was not showing signs of buying. So it was actually showing oversold indications. And whenever we see one of the more defensive sectors tending to give us these oversold indications, what you'll notice is it's often been, again, synonymous with bottoms of markets. This is thanks to Jason Gottfried over on X, if you want to have a look there. So why is this all important? Well, we've already got some stats. Sentiment, my goodness, there are serious problems with retail when they go that bearish that quickly. But on top of that, we've also seen here valuations start to come through. Banks have come in hot. And as we know here, based on this Jury and Trimmer chart, that if we get good banks, good earnings in general, and EPS starts to improve, that's the phase we're in this market. Traditionally, the kind of third state phase of a bull market. And we've got to kind of be going, well, if earnings are coming along, that's enough for us at this stage. Remember, we're about to hit 80% if we have a good earnings this first or this particular quarter. And basically, if we get that, that is going to take us with 12-month percentage changes over 80. It puts us into the final stages of bull markets. And of course, we are hopefully going to be there for it. So remember, all of these things are good. Now, are they even better potentially for the Russell? Well, remember, the Russell went from being pretty good after the Trump victory all the way back down to wiping all of that out. And even at the time of this recording, it's only trading at about this level here. Now, if this ends up being a further bullish rally, and of course, it's always an if, there's always a chance that it isn't this. And yeah, everyone suddenly switched towards the bull end. So, of course, that chances a potential of a little bit of a pullback here on this rally. Maybe there's a buy the dip here coming up this week or next week. But in general, you can see that Russell 2000 performance, when dipping below the 200 but having a prior year that's pretty good, often does still come with the V-shaped recovery. You can see the 1 year max gains are exceptional, except for one. So Russell 2K, I wouldn't sleep on it just yet, especially in the potential here of tax cuts and deregulation. Remember, the regional banks in particular could be big winners of the Trump victory. Now, what about third year bull cycles? Are they harder? The answer is just quite simply yes. It's not just like buy the dip, all good. It's more about rotation. And of course, that's going to become plainly clear as we enter through the first quarter. US dollar is also an interesting target. If that keeps bulling, let's say it does go and break new highs, it could put a lot of pressure on stocks. It could put a lot of pressure on other things. But remember, we got a great read for gold the other day. And this is how gold usually looks over the next 12 months. Maybe a little stumble here, but generally speaking, a very bullish stat towards gold. And as you guys know, we're looking for $3,000 an ounce. We've been looking for that since $1,800 an ounce, and we continue to not really change our opinions there. Now let's move over to crypto for a moment before we look at dark pools, options flow, and of course the charts. And first up, yeah, we already knew this would be positive. Remember, these are slightly delayed. So this is just so we can see whether Bitcoin funds and Ethereum funds are getting the right movements in. But you can see here, positive 7-day flow now, which was negative, positive 1-day flow, which was negative. And after the dark pool trades, that's a good sign for things like Bitcoin. Same thing for Ethereum, although it has dropped since, of course, the Trumpcoin came out and it was on the Solana network. Now, this is why crypto's wild. You know, of course, XRP's been moving up a lot. Trumpcoin is the discussion of the last 48 hours. I would probably think it's over now in terms of the massive run. Some people disagree with me, but you can see here some whales are absolutely cashing out big time. This whale, just for example, dumped 861,000 Trump coins, 23.8 million, banking in something like $14 million or something of profit. But in general, yeah, the internet's covered with all these people making supposed money from Trump coin. Of course, there's going to be some winners, but someone will eventually be left holding the bag. So just be careful there when you're getting into those types of things. Remember, they are pumps and they are generally dumps. But the Solana network is a big winner on this. And of course, the selection there pushing Solana through with some good price action. Solana and Ethereum have been the two alts we're looking at. Ethereum not doing well, though. We'll look at that soon. So this week, there's a few highlights. Obviously, we're in earnings season, and that means we have to continue to look for that 80%. We want to see lots of stocks doing well. And in this case, we've got Netflix probably as the big contender, another big tech coming out. And the week after this week is going to be huge. Remember, guys, as well, Martin Luther King Jr. Day on Monday. That means the stock market is closed, as is the bonds market, as Inauguration goes on as well the same day. So it's going to be a shorter week. That often is not necessarily a bad thing. Markets do often rally into these particular holidays, so it's not unusual to do that. Sometimes you drop the first session as well, so the Tuesday session actually might drop off. Wouldn't be surprised. And then we, of course, will look for the earnings. But generally speaking, Netflix is the one that most people will be looking at. And of course, we'll follow along on each and every one of those. So make sure to subscribe for it. Now let's move over to what we've been seeing in the market. So this is actually an interesting one. This is ProShares short S&P 500. Big dark pool trade coming in near the close. And that kind of suggests that somebody just tried to short the market. Now, of course, this is coming off all that bull euphoria. To be real, I still think the market is going to go up overall, but of course there can be ebbs and flows, and a lot of these short funds are short-lived. So basically they're pretty quick kind of trades. So it's possible that someone put in a short near the end. We'll see how that plays out. I also thought it would be worthwhile bringing up a single stock we haven't talked about in a while, which is Amazon. If this market is to rally first or go forward, Google and Amazon should be two that do quite well. They're still probably the cheapest in terms of the forward PE of the Mag 7. And we can see there was that huge trade up here near the highs after the number one biggest trade we'd seen in a while. So if we go and we actually start moving up, that's going to be like a flag pattern. And of course, it's going to kind of consolidate this as potentially being a buy, and the market is ready to go to the next move. What about Bitcoin and crypto in general? Well, of course, we saw Bitcoin buying the low, which was pretty cool. We also saw Bitcoin Trust in general getting this massive trade on it just near the end of last week. And so far, this went up again. Now, why this is important is because, of course, this breaks the ABC pattern that a lot of people are looking at. And if we can go to these new highs, which I think we're already putting pressure on, or if we're not already doing it, we'll look at it soon. That is kind of showing you the Bitcoin, even if it pulls back, should be still in a bull run. So in general, the crypto market looking better. Dark pools coming in across the board last week for all of the S&P 500 and Qs and Russell and equal weights and stuff. You can go back over some of our previous videos if you haven't seen it, and you'll see what we're talking about. So let's look at the bullish case scenario here. S&P 500 breaking the downward trend line. It's even more pronounced when you look at the US 100. And yeah, it certainly does look pretty good. Closing with a long leg doji on the Friday session, obviously leaving some gaps behind, which does open up the potential here of something like this. And actually, that would be the best trade. That would be pretty sweet if that did happen. Now, I'm not banking on that. We already talked about why taking 59.30 was a very strong kind of level last week. We talked about the breadth improving underneath the hood. But this is a good sign. Of course, you can always say, well, it hasn't broken through here, so it hasn't made a higher high. And you can always make excuses each way, of course. But in this case, I think if you look at the equal weight, if you look at the regional banks, which obviously did improve over last week, all of these things are positive cases. And the same with the just general banks, island reversals, some of the metals started to improve. There was a significant shift, I think, towards the up case here after going to that incredibly low. That is a bad sentiment result. Now, don't use these options levels. I'll update them as we go through this week. So those options high and low levels won't be correct. But I just want to show you here that, again, the breakouts happened on the futures market. It's taken out a rejection looking candle and it's closed above that previous high. To me, this again signals that if markets are to come back down, let's say they go to 58.50 for whatever reason, it's most likely going to be a buyer there. And if we see dark pools transacting at this level, large transactions going through there, let's just say that happens, that would be incredibly bullish. And of course, we would be looking at that. Now, for the bear case, what have you got? It's really just you're having to hope that people are trapped on this side for whatever reason, and Wall Street really doesn't want to push it up. Of course, the MACD, the breadth, the sentiment reports, the evidence is pretty overwhelming towards the buyer. But let's say Trump comes out and does something crazy, day one, day two, whatever. If that happens, then it is possible that, of course, it could drop back down. So you can never be sure of anything, but you can stack the odds in your favor. Speaking of stacking the odds in our favor, what are we looking at post-OPEX here when it comes to, of course, the zero DTEs? 6,000, guys, is the level again. If we get through that, positive gamma all day, and the market should start squeezing higher. So, of course, where did we close? 59.97. We're right around 6K. 6K is pretty much everything. Get through 6K, we could be starting towards 6,200 pretty quickly. When we go over and have a look at, of course, Nvidia, you'll see here, still doing well, had a good day, up 3% after kind of seeing those two Marabuzu red candles. But in general, it's been, I would say, subpar. I wouldn't say that the semis have absolutely been blowing it away, but they've been holding. And remember, we saw that from Wall Street, that last month of semis wasn't that bad overall compared to some of the other sections of the market. It actually held up while the rest of the market was selling off. So 135 plus, that's good, but not through that magical 140 again. So get through 140. I think we could be talking about finally an all-time high here for Nvidia. 140 is going to be a big positive gamma switch zone. And then, of course, there is Tesla. So Tesla, most people looking at around 450. You can see here 450 comes up quite a lot on the options. And you'll just notice there's still this huge bullishness left over from that big move post-Trump victory. So a lot of people still betting on Tesla. I'm not so much anymore. As you guys know, we loved it into just around that 500 just before. We started to see selling there. To me, that was, enough. 200 forward PE. Okay, I'm cool with that. Let's just get out for the time being and reassess. So you're basically looking at 380 buy zone, 450-ish, probably where targets will be set. Now, guys, just before we get into the charts and we look at all the key levels that we need to watch this week, I wanted to give a big shout out to the sponsor of today's video, which is obviously Tiger Brokers. Now, we've worked with Tiger for quite a while, and since that time, they've actually won quite a lot of awards. A new award be coming through this year, which is really sweet. But if you want to, go and check them out in the links in the description, see if they're available in your country. Specifically for the Aussie viewers out there, you get special value by being an FX Evolution watcher. You can see here all the special things you get, 4x0 brokerage trades, and even more importantly, 0 FX fees. You've got to get that odd into some of the other currencies. Obviously, we're looking at US dollars a lot of the time, but remember for the Australians out there, not only do you get cheap brokerage, and you can see here the comparisons with some of the other platforms out there, but have a look at this. Trade US stocks 24/5 with Tiger Trade. It's too hard as an Aussie. You need to be up really late, 1:30 in the morning to get into the open. And obviously the close happens really early. So if you have access to 24/5, then you can trade your favorite stocks at a more acceptable time and get your entries. Check them out. Links in the description down below. Thank you so much to Tiger, and obviously see if they're right for you. All right, guys, well, let's go into what is leading in this market. We talked about bonds. We talked about how bonds were not freaking out recently in the drop. And we also mentioned that as of the 30th and 31st of December, that we were seeing a significant shift at this point towards the bull case. Because remember, if this is going down, the bull case for the stock market. Now, that has continued. We saw a nice drop there on Friday. That's fantastic for, of course, buyers and a good sign. We also saw Homebuilders improve, which is good. Of course, that's still down, but it's improving, which is fantastic. And the American consumer discretionary versus staples, went on to make a new all-time high in terms of here, the ratio. Now, this is important because, of course, it shows us the American consumer is generally strong. When we look over at yields have dropped back after freaking everybody out, which is important. Not out of the woodwork yet, certainly not even changing trend at this stage towards the downside. But we did see some TD13s. We saw some overbuys on the US 30-year in particular. And the US dollar, while it was dropping for most of the week, picked back up on Friday. And the one we're looking at here is probably going to be the Euro US dollar, which is a pretty good read here on the markets. Obviously, the daily 20 moving average will be what you want to look at. And there's a lot of long leg doji here. The daily 20 moving average sits right on this level. We're watching to see how this interacts. At the moment, of course, most people are going to be short Euro. Rightfully so, trends down, rejects the 20 every time. My 1-2 system, obviously, through here and absolutely short the whole way. However, at this stage, you can say, well, wait a second, we've got a counteracting candlestick pattern. And if we do break up, we're going to break a trend line. There are some things here that could switch just like that. So make sure to subscribe and watch the videos. This will be a big deal if it does happen in markets. For the moment, though, US dollar still in a worrying zone, but not as bad as it was maybe a few weeks ago or about a week ago. Let's move over here to gold, right at resistance. This is probably where gold is going to have a little bit of trouble. You can see here that 27 kind of 30, 27, 25 zone. Certainly a resistance here for gold. So something we're watching. Still bullish overall on it. And silver managed to do okay for the week. Still making a series of high highs and high lows, smaller time frame. You'll notice it's a doji on the close. So yeah, again, waiting for that US dollar. But yeah, still bullish on silver, still bullish on gold at these prices. What we're probably not bullish on is oil. As I mentioned, I just feel like oil is going to have to take a breather. We were super bullish on it. Well, not super bullish, actually. I was bullish neutral, but we were bullish on it. And that's because of purely price action. And then we started to go, okay, well, this thing's moving to these next targets. It actually hit our second target, slightly went over it. So congrats if you got that. And now I think it's in consolidation. So, of course, this is an interesting chart, though. And there are some reads that actually say post cuts. This is totally against what most people think. Post Fed cuts, oil traditionally goes up. If you're interested in that, we might share that in our next video. There is a cool chart there that you'll find very interesting. There could be more in oil than you think when you actually have a look at these overlay charts. Let's now move over to Tesla. As we mentioned, 450, 460 is where that kind of resistance is on the charts here. You can see it's still struggling around that 425. 380 is where the big buyers are. So it's going to probably stay range bound for a little bit after that huge rally post-election. I mean, people did just so well on Tesla. Hopefully you were one of them. AMD, one of the stocks we've been looking at here on the lows. Obviously, I don't think it's cheap, but the thing is, big traders did buy. We know somebody bought a monster position here. It's taken a low, didn't quite come out of the gates with what I would call a clean sweeps type of island reversal, but you got to remember that was a gap low. This is actually a gap up, and it started to improve. Now, if it gets through 133, 132 in the future, that's going to be a huge deal. But for some bottom feeders, I guess, in the stock market, AMD looks interesting. And of course, the story of Friday was Intel. Pretty much one of the most hated stocks in the market, coming through with the goods, 9% up over the session. Is this finally the bottom of Intel? We've looked for this for a little while. We obviously looked over here. And I ended up getting stopped out on this trade, which is kind of annoying. I was up quite a lot of percentage at one point. But anyway, it happens. And then the question is, can we get to $30? Is that about time? What do you guys think in the comments down below? Certainly a big gap up there. As we mentioned, Amazon with that kind of flag pattern. Again, if it breaks out, that's a good sign for the stocks. And Google also in consolidation at this stage. So when you're looking at it on the charts, which we'll do right now together, you can see here there's a lot of consolidation. These are all good case scenario breakouts if we're looking for continuation of the bull trend. Of course, you get Google breaking out, you get Amazon breaking out. It kind of solidifies that, yes, that was a dip and the buyers are back. Let's have a look at iron ore. A phenomenal Friday. Great move there. That's, of course, going to help HSI, which is the Chinese stock market. They're kind of linked together. We saw monster trades on Vail last week. I mean, like the biggest I've ever seen. So that was interesting. I don't like Vail. It's not a great company, but, you know, big iron ore transactions coming through. Interesting stuff indeed. HSI obviously regaining past this all-important buy level. Very tough on HSI in terms of trying to day trade it, but obviously an investor or position-based buyer may like it there. What about the US 2K? Interesting. Hasn't actually broken out. You'd think it would have with KRE, regional banks, which makes up a huge part of this. Obviously, some weak parts of the US 2K. We like the price action, though, and I particularly like, of course, the 2300 break zone. I'd love like a trade like that kind of thing. That would be a sweet trade. So we'll see whether it does happen. US 2K certainly in the sights, though, due to those stats. What about the NASDAQ? That's a clean break. Most people will look at that clean break. Good change here. Obviously not above this higher high. So some people will say, well, okay, it hasn't changed the sequence of downward trend yet. We have seen more of a change of sequence almost on the S&P 500. Obviously the Russell is touch and go as well. But some of the internal components, the value components, some of the, even the growth and the small caps, some of those have actually already broken to the upside. So again, the internals of the market look better than they have in quite a while. Now let's move over to crypto and Solana, and of course Trumpcoin and XRP are the big winners here. Solana going bonkers to the upside. It's a great coin. Of course, many people see it as the ETH 2.0 kind of thing. But Trump's choice of this one seems to be getting everybody very excited. generally speaking, I trust the Solana move than I do more the Trump move. The Trump coin is what it is. You can go play with it if you want to, but be careful out there, guys. But that is a very good sign for crypto. But of course, what's not a good sign for crypto is when you look at some of the other coins. Ethereum sitting, doing nothing. Yeah, good area for sure. So this is a good demand zone for it, but it suffered after that news, and of course, not being selected. And you can see here, Bitcoin still holding strong, making that higher high. That's a good sign. Again, this market looks really good. We love Bitcoin. Bitcoin's my favorite coin. Nothing beats it. Of course, I do want ETH and Sol and ADA probably to do really well, and some are. But yeah, in this case, you can see here Bitcoin coming through with the goods. So this is good. And coming off the back of, remember, that large trade that was right here, to see this price action is a confirming sign that maybe we've seen that pullback in time and maybe Bitcoin is ready to get back up again. Do remember, guys, Monday is going to be a bank holiday. Then we go through, of course, and we've got some interesting information coming out during the week. We've got Bank of Japan, which is in focus again, supposedly trying to do some rate hikes. I laugh because, they never managed to do any of this type of stuff. But anyway, that's what supposedly they're trying to do. Inflation controls and things. And then, of course, we've got PMI for the US on Friday. It's going to be earnings week. It's going to be the kickoff of just, can we continue these trends? And of course, we've got Trump inauguration, and then we'll kick off the volatility that comes with that. Do remember, these weeks can be volatile. Often it's actually a considerable time for markets to actually drop off. A lot of people are seeing this as the post-inauguration pump with a drop. We'll share some charts over on X later on. So just a reminder to follow us on X. Follow me on LinkedIn as well. I posted some excellent kind of information out there that you guys can follow along on psychology of trading. You might be interested in that in 2025. And also a shout out to the sponsor of today's video, which is, of course, Tiger Brokers. Check them out in the comments down below if you're interested, and the pinned message. And obviously there are specials if you're from Australia. It's a great way to start 2025 by looking at the best market in the world. And of course, that is the US one. Thanks so much, everyone. We'll see you in the next video. Bye for now.